Hola mi gente, welcome to La Vida es una podcast, a space where we have authentic and honest conversations about life experiences. We are your hosts, Itzel and Dante, y muchas gracias por acompañarnos en este día. Estamos estrenando un nuevo micrófono. Thank you so much for bearing with us as we continue to improve our audio experience. But yeah, we're super excited to get started. In today's episode, we are going to dive into the world of high yield saving accounts and why now is a perfect time to explore them. We believe this is an essential topic for everyone to know to build a stronger financial future and one more tool you can add to your financial toolkit to help you take control of your finances.
We believe that high yield savings accounts play a crucial role in personal finance, so get ready to learn what they are, how they are different from a checking account, and their key benefits. We'll even talk about the savings accounts that we have today, and we will share referral codes in case you all want to check them out.
So let's start by understanding an important aspect of high yield savings accounts, which are interest rates. So, what are interest rates?
Interest rates are a percentage of the total amount in your savings account that the bank pays you for storing your money with that bank. This interest payment is usually done on a monthly or annual basis, and interest rates tend to be in the range from as little as 0.01% at most traditional banks to something as high as 5%. One simple way to think about this is that when you fund your savings account, you're lending money to the bank, and then the bank is paying you an interest rate for that loan at the end of the month. Now, I would like to explain how banks are able to pay interest. The reason why banks pay you back a percentage for holding your money is because they usually use the savings account total deposits to offer loans to other people. And imagine a bank that has millions of accounts and lots of people who deposit money into those accounts, then they're able to loan that money for folks who maybe, for instance, buying a car or they're looking to buy a home and they need a mortgage. They're able to aggregate all those deposits and lend that money to those folks at a higher interest than the one they're providing you in the savings account. Now, the higher interest rates that these banks are charging consumers for borrowing up large amounts of money over time helps to cover the cost of a bank's interest program and also earn revenue. Banks may also invest some of the saving deposits that gives them a higher return, which then also gives them additional revenue. So, there you have it. You know now why banks offer savings accounts and then are able to pay you interest on top of them. Let's go back to the topic of interest rates. At the end of the day, interest rates determine how fast your money grows over time. And right now, interest rates are running at an all-time high, which is a great time for you all to take advantage of high-yield savings accounts.
But here's the thing, just like ocean waves, interest rates can rise and fall. By taking advantage of high interest rates right now, you can grow your savings faster.
Imagine the impact on your future if you were to open a savings account today. Your hard-earned dollars multiplying at an accelerated pace with that interest, creating a solid foundation for the life you envision. It's really like unlocking a new level in your financial journey. With a savings account, you're putting your money to work for you, and in return, you get paid that interest every month or year. Now that we've talked about interest rates, there's also an important concept that we want to discuss, which is the concept of compounding. Compound interest is when you earn interest on both the money in your savings account and the interest you earn every month. So let me walk you through an example. Let's say you have $100 in your savings account and that money earns 5% interest each year. By the end of the year, you'll have $105 in your account. Now let's look at the second year. You're going to start earning 5% on the total amount of $105. But remember, you initially only had $100 in your account. But in that first year, you earned $5. And then in the second year, you're going to earn even more interest, which will end up being a total of $110.25. And that's the power of compounding. Every year, the balance you're earning interest on is going to be increasing. Hence, your interest payment is only going to get higher and higher every time.
To recap, you started off with $100, and that first year you earned $5 of interest. Remember, your savings account is earning 5% interest. So then the second year, you start off with 105, the 100 you initially put, and then the $5 in interest. Then you earn 5% on the total, which by the end of the year will be $110.25. The way that I think about this is you're earning 5% not only on the money that you initially put, so $100, but you also earn 5% on the interest payments that the bank gives you.
Yep, that's the magic of compound interest. One thing to note is that for this example, the savings account is accruing interest yearly, but most savings accounts today earn and compound interest on a monthly basis. So that is why it's a great idea to open a savings account sooner rather than later to benefit from compounding. So imagine you're getting paid $5 every month. That could pay for a snack, maybe a subscription that you have, all by opening a savings account today.
Okay, so now let's move on to the question of what is a high yield savings account and how is it different from a checking account?
Let's start off with a checking account. This type of account is meant to be used for your daily expenses, such as paying your bills and subscriptions or withdrawing cash at an ATM. The second type of account is a savings account, which is meant to store and grow your money for a longer period of time to help you meet a financial goal, such as creating an emergency fund or saving up for a big purchase, such as buying a home, a new car, or a new laptop. And the best thing about savings accounts is that you earn interest on the amount you initially deposited, as we just discussed. There are two types of savings accounts: your standard savings account that usually earns small interest, around 0.01%, offered by traditional or big banks like Chase and Bank of America. And then there's a second type of account called a high yield savings account that usually earns higher interest than 0.01%. These are mostly offered by digital banks because they don't have physical branches, so they're able to pay you more interest. And the typical range can be today around 3 to 4%, if not higher, up to 5% APY. Now let's talk about the differences. So unlike a checking account, withdrawing funds from a savings account, it's often limited to a few times per month by banks, and some may even charge you a fee if you exceed their monthly limit. The reason they do this is to incentivize you to save your money and not spend it. On the other hand, checking accounts may offer little to no interest on their deposited funds, as their primary purpose is to facilitate your everyday daily transactions instead of accruing interest. So now you know, by putting your savings into a high yield savings account, your money can grow faster over time. Really think about this as turbocharging your savings, and digital banks are the way to go. A lot of traditional banks today, they would offer you a very small percentage of interest. Like I mentioned, I think Chase offers 0.01% as of June 2023. But if you look at digital banks, they differentiate themselves from traditional banks by giving you a larger percentage. So in interest, you may be earning 4, even up to 5%. And we'll cover some examples of the accounts that both Itzel and I have opened so that you can check them out.
I think the concept of digital banks is a new one, and so I can understand how this can be scary to some folks. It was definitely something new for us up to a year ago. We didn't really know about digital banks, and I'll share a story about my transition from traditional to a digital bank. But if this is a new concept for you, I would highly encourage you to dive into it, learn about it, get more familiar with digital banks because although it may be uncomfortable having spent a long period of time with a traditional savings account with banks like BOFA, Chase, and like Wells Fargo, digital banks are the ones that are offering these high interest rates for your savings. And I really think that it can make a really positive impact in your financial future to not only learn about digital banks, but also open up these accounts that are giving you money back and making your money work for you because we all work hard to earn our money, and what's better than having a savings account that gives you money back for doing what you're supposed to be doing, which is, putting aside some savings for your future. My mom opened up a savings account for me when I was like 15, 16 years old. And up until last year, I didn't know about digital banks and high yield savings account. So I had stick to the traditional account, which was literally earning me like a penny a year. I kid you not. It's so embarrassing how little Bank of America was giving me. And because I didn't know about high yield savings accounts, I didn't know that there was another alternative to keep your savings. I just kept it there for 10 plus years. And again, like it's one of those decisions that you wish you could go back in time and know about these concepts earlier so that you can start putting your money and have like years of your savings creating money for you. I know I mentioned this in like the last episode. When it comes to financial decisions, sometimes we're really hard on ourselves for not having known information that we know now. And that's definitely me right now. But I'm trying to show myself some grace for not knowing this information because, again, like nobody really teaches you this in school until you know somebody who has a savings account, a high yield savings account, and then tells you about it. As we're sharing this information, we may not know everything about personal finance. Obviously, we're not experts, but this is what we know and this is what we've learned, and we want to share it with you. And if you know something that maybe we don't know or other people don't know, please share it because the more this information gets around into our families, to our friends, to our communities, the better we are all going to be in our financial journey. And isn't that the best thing we can wish for everybody? So, yeah, that's my story of how I was earning literally a penny on my savings account for like 10 plus years. Again, it's like not the best feeling in the world to have that experience, but now I'm using a high yield savings account and moving forward, like I want everybody to take advantage of this and yeah, that's why we're sharing this.
Thanks for sharing that, Itzel. I also have my own personal story around my savings journey, which I'll share shortly. But I do want to highlight the fact that today most savings accounts and most banks are FDIC insured, meaning that your deposits into your high yield savings accounts are going to be protected and secured up to $250,000 in case the bank were to fail or go bankrupt. This is very important to know given that recently folks may have heard about this, the crash of Silicon Valley Bank. So just know that your money is safe. And as you start looking for savings accounts to open, just look out for the keywords FDIC insurance and you'll see that, most of these banks will protect your money up to that amount.
To recap, a high yield savings account can always be useful for short term financial goals, like buying a car or saving money for a vacation. It may also be used for storing an emergency fund, which we talked about in our last episode, number 8, budgeting strategies. So make sure to check it out if you haven't already. Okay, so now let's move on to talk about why high yield savings accounts matter. They matter because if you're someone who has been saving money consistently in a regular savings account with a low interest rate like I was, your money is just sitting there and not earning any interest and actually losing value because of inflation. Saving money is a vital part of building financial security. Whether it's for building your emergency fund or saving up for a vacation, having a solid savings foundation is crucial to reach these goals. When we opened up our high yield savings account earlier last year, we quickly started to see the magic of compound interest as we saw additional money just put into our savings account monthly, which, who doesn't like free money, but it is definitely something now that we tell everybody. And that's why we wanted to talk about this topic today. So now that you know what a high yield savings account is, there are a few things to keep in mind when deciding to open an account.
Yes, for example, some high yield savings accounts may require a minimum balance to earn that attractive interest rate, or you may need to have a minimum of $1,000 in your savings accounts to get that higher rate. Some accounts may require a certain amount to be deposited into the account initially to qualify for the high interest rate, so there is some maintenance work that you need to do on your end to make sure you keep that high interest balance going.
Also, while many high yield savings accounts don't charge fees, some might have a maintenance fee or other charges, so make sure you understand all of the account requirements when choosing a savings account. Make sure you read the fine print to avoid paying any fees in the future.
One more thing, when choosing a high yield savings account, do your research. Look for reputable banks or financial institutions that offer competitive interest rates and that have transparent policies. One tip we wanted to share with you all is that in order to make the most of your high yield savings account, and if it is possible for your financial situation, consider setting up automated direct deposits from your paycheck. This way, you're consistently building your savings habits while practicing the pay yourself first budgeting method we talked about in our last episode, since you will be putting money towards your savings first, and the rest of your paycheck will land in your checking account, and that money is now for you. So now I want to share a quick story about my savings journey. As Itzel mentioned, we opened our first savings account last year. So prior to that, I had no savings account, and I think that's a big mistake. Maybe a bit delay as well. I wish I would have done this earlier in my life, but really, it's never too late to start. Prior to having a savings account, I used to save my money in my checking account and it was earning zero in interest. And then I started investing a little bit and adding some of my money into a brokerage account like Robinhood and in a 401k account for retirement, as I did not know much about savings accounts and interest. Now, the main reason why we decided to open a savings account was in my job, actually, I work at a digital bank. So, one of the benefits has been learning a lot more about how banks work, specifically about how savings accounts work and their benefits. And so, after doing our research, we decided to open an account, our first account with SoFi Bank, because they offered a unique account structure. So, you actually earn interest on your checking account. As of June 2023, their current rate is 1.20% APY. And also, you earn a higher interest in your savings account. So, as of June 2023, they're offering a 4.30% APY if you set up your direct deposit with them. SoFi is a digital bank, it is FDIC insured, so your money is safe, and their app and website are easy to use and navigate. We also have a second savings account with Referral Bank, which is where I currently work, and they offer 5% APY, which is one of the highest in the nation. If you set up $1,000 of direct deposit every month, this is your payroll or your paycheck, and allocating $1,000 to go into your borrow account every month. And you get this amazing rate up to the first $5,000 of balance with your savings account. If you don't set up direct deposit, they do offer a standard rate of 3% APY, which is still pretty good. And Varo is also a digital bank, and you can manage your savings account from your phone or your laptop. In addition to earning high interest, a key benefit that a lot of digital banks offer is to get paid 2 days early, which is fantastic.
I wanted to mention that last year I moved from a traditional savings account to my first high yield savings account. But Dante that was his first time opening up a savings account, period. Like, not even, I know you didn't even have a traditional savings account, right, Dante?
That's right. That was my first official savings account.
Hey, nothing wrong with it. Nothing wrong with it. It's just, we all have different financial journeys. It's so interesting. I wanted to share this idea concept. I started reading this book, The Psychology of Money, which I definitely want to do like an episode on coming up, so stay tuned. In the book, they mentioned that the way we think about money has been shaped by everything that we've experienced in our lives. That means that somebody born like 10 years younger than you thinks and behaves very differently in regards to money. So what some people might consider like very high risk investing, other people consider that like not very high risk, but that's all because of the way that they grew up. It's such an interesting concept to me, and that's why I said like there's nothing wrong with opening like your savings account at different stages in your life. It is because of what we've experienced growing up. So if like Dante didn't get exposed to savings early on, it's because of his parents' experiences. And similarly to me, my mom's experiences shaped my financial journey and the way that I think about money. So we're coming from two different backgrounds. And so if you feel like maybe you're a little bit behind also in your financial journey as we're talking about this, please don't feel like that, because we all come from different backgrounds, socioeconomic status, we all have different money experiences. So I think we're all just trying to figure it out here, and what's better than building community and sharing this information so that we all get to reap the benefits of these accounts.
That's right, Itzel. And no looking back, after you have a high yield savings account, your money's growing effortlessly. So to help you in that journey, if you're interested in opening a high yield savings account with SoFi or Varo, we will add our referral link to this episode's description down below so you can check it out. If you were to open an account with our link, you will get $30 from Varo when you spend $30 within 30 days of opening your account, and $25 from SoFi when you fund your account with at least $10. Who doesn't like free money, right?
As we wrap up today's episode, let's recap the main points we discussed. We explored the power of high yield savings accounts and how they can accelerate your wealth building journey, shared stories about our personal journey with savings account, and we provided examples of 2 high yield savings accounts that we have.
While high yield savings accounts are essential, they're just one piece of the larger financial puzzle. Another piece of this puzzle is budgeting, and we talked at length about it in our last episode, so make sure to check it out on your favorite streaming platform, even on YouTube.
I hope that this episode has made you feel more comfortable with concepts like digital banks, interest rates, compounding interest, and has empowered you to open up a high yield savings account. Remember, building wealth is a marathon, not a sprint. Opening a high yield savings account is one step in the personal finance journey, and it is a great smart step towards securing your financial future.
Stay tuned for more episodes on personal finance topics like this one. If you like this episode, don't forget to follow us wherever you listen to podcasts so you don't miss out on new episodes. If you have a few minutes, we would really appreciate it if you left us a review, as this will help us reach more people. You can follow us on Instagram or TikTok at La Vida es una Pod. Thank you so much for tuning in, and we'll see you in our next episode.
Muchas gracias, mi gente. Les mandamos muchos abrazos. Hasta la próxima. All right, I gotta say this. We are not financial experts. This episode is only for educational and entertainment purposes.
What time is it?
Money time.
It's time to save up. Cha-ching!